Hi, welcome to the Market Alert for Tuesday, the 14th of July 2020. So, the higher the number of COVID cases and the more layoffs, the more bullish it is for stocks. And it's been absolutely true since March. The worse that COVID-19 gets, the better the markets do because the Fed will bring in stimulus. That is what has been driving markets, and it's absolutely spot on. However, there was talk yesterday that the economy is doing so well that they may remove some of the stimulus, and that sent the market lower. So let's have a look at this, and we'll start off with the DAX. This is the daily chart, and here you can see prices trading up to the resistance to the left there, and then closing back below the 5-bar moving average yesterday as prices move lower. I'm just going to widen this and move in a bit because I want to see more detail inside of the daily chart. So you can see that yesterday we traded up to the 12,845 off this high, and then the market was hit with the selling. We've closed below the 5-bar moving average and we're down on the overnight. However, we did gap higher, and we've got to stay above the 20-bar moving average. That's the first prerequisite. Also, you want to draw in from this low to this high as well, just to see how far from a Fibonacci perspective prices will actually come back. So from this low to this high, you can see there that we're already at 62%. Make a note of these figures for today's trading session. They'll be very important, which you will want to keep an eye on. And the 89 retracement takes you down to the 20-bar moving average there if prices move down in this direction. Today is Tuesday. The markets can be an interesting one on Tuesday because all of the news from the weekend is factored in on Monday, and as of last week the market was quite quiet and sideways, so we could see that again today. So it's renowned for a Tuesday where markets are fairly quiet. So yesterday we saw the market continuing lower into the evening, and then prices have gapped higher, and generally they will fill the gap, and you'll see the gap being filled here on the overnight as prices now trade below the 200-bar moving average, as you can see here. Let's have a look, see where the DP level is, see if it's below or above at the moment. So we get an indication. It generally will be above the 200-bar moving average if prices are below the 200 MA there, which they are. So again, prices sideways to lower. Quick look at the Dow, bigger picture. Get that back up, and again you can see yesterday prices going through the 200-bar moving average only to be sold into, and prices sideways on the overnight there. If I can find the 5-minute chart, here we go. So yesterday you can see the sell-off late into the evening through the 20-bar moving average, straight through the 200 as well, and back down to the high. I mean, I was talking about the high yesterday in the previous day's market alert. So the Dow, a bit of a range at the moment as well. Gone quiet, but that will change as the markets open. So in Europe, so yeah, there's no gap up on the Dow, just open more or less where it closed. Okay, let's have a look at the news. What have we got today? Nothing. It says medium impact, but I keep an eye on these. GDP month on month is a high impact news item. This is out at 7 a.m. Which will be out shortly, half an hour from recording this. And the CPI is also a high impact. I don't know why they've downgraded these. So treat medium impact news items as high impact for the time being, then you won't get caught out. Okay, let's have a look at yesterday's trades before we conclude. So yesterday's trades, the market started off by moving lower. There was actually a signal in the pre-market here at 8:58, but unfortunately it's not signaled because we don't start until 8. So, but as I've said before, if you've got those options turned off, or on, depending which way you look at it, and also you can see that we've already got the selling there, but I didn't take this. I just want to keep to the signals just to keep things simple at the moment. So the first signal turns up, or official signal turns up here. You can see the clear circle. We've got the R1 above this, and what's nice about this is that the market's gone and closed through the 200 MA, which we could see earlier was a support for this market as prices moved higher. So having closed below this and also failed to move to the upside, which you can see there with the lower highs, then we have a potential sell there. So let's fast forward through this, and what we're looking for is prices to continue lower. You can see they come back and have a look at the BRN, and again we're below all of these three at the moment, which is a good sign. So prices come back and have a look. Doesn't look like it's going to go, and then eventually as prices came through here, they were hit with a bit of selling. There must have been some sell orders, because then prices sail to the downside, which you'll see. Now we've got a bit of buying coming into the market here, but we've only just been filled on the trade, so there's not a lot I can do about this. I could jump ship if I wanted to, but to be honest with you, with having the BRN there, the 200 bar moving average, the 20 bar and the R1, and also that weakness that we spoke about there, it still remains to the short side. And that's exactly what happened. I'm just going to fast forward through this. You can see that we went through to the scalp, and then what I've done is mark up here, because I know that the market came off the lows here, and you can see where it closed. So I can see there's been some buying down at this level, and we need to drive through it in order to move lower down to the BRN, which prices do. You can see them going there, but you can see also how they come off the lows again because of that buying area that we had to the left, and also the increase in volume is showing this. So again, now I'm sitting at break even on the trade, and I want the market to get down to that BRN, and prices then eventually move down. Now again, at these levels, as I've said before, there's nothing wrong with taking profits at these levels, because they are areas where you will get buy limit orders, and you will see as this completes. There you go. You see you've got the professionals taking profits from the short side of the trade, and also some buy limit orders coming in. So there's nothing wrong with taking the money off the table at this stage, and that's precisely what I did, as you'll see there. And there's the trade. You've got the entry and the exit on the trade. So that took care of the morning, and you'll see prices coming back as well. So it was the perfect spot, and like I say, this is the key, understanding and being able to read each price bar as it unfolds gives you that edge as a trader, that it makes a big difference in getting as much out of the trade as you can. So in the afternoon, the market started off, as you can see here, it was volatile. We had a sell signal which wasn't filled until this point, when you can see prices now starting to move lower. And again, always look to the left, and you'll see there is some support in the market here. We want to get down to the scalp minimum on this. Always a bit of a risk at the beginning of a session, especially in the afternoon with the Dow. We've got the selling coming into the market, which we can see here as well, and we've taken out the low to the left. The goal is to get down to the high, but again, the first 20 minutes in the afternoon can be volatile, and you can expect to see some sort of quick reversals, and in this situation some buying coming into the market. So here you can see prices down at were 15 points at one point, down at break even, but here you go again. We've got the green coming into the market, so we know that they're starting to buy. This is your first warning. I've got the stop at break even, and then you'll see as we complete this bar, you will see, if we can just get to this point there, we've now got a second one, and for me that says that we're not going to go much lower at this point, if at all. So once again, you know, it's the stop. You can either leave the stop at break even or take the money off the table at this point. There were 15 points, but currently there was only the 8, and you can see the market then coming back and trading sideways, and then going back and retesting. But you know, it didn't go down to where I wanted it to go down to when I was in it. It was just stayed at those sort of lows, as you'll see there, and then started to come back. Okay, so that was yesterday's trades. Let's have a look at the overnight market, see where it traded and through the night, and what we can glean from this today. As I said in yesterday's market alert, the high was very important for this market and for today's or yesterday's trading, and again it seemed to pay off. Okay, just before we conclude, keep an eye on the levels that we've spoken about in the daily chart, on both the downside with the fib retracements and the 20 bar moving average, and also on the upside, just in case prices decide to move higher. Then keep a note. Well, actually the high will actually be on the intraday chart, so should prices move higher, keep a note of that. And if they move lower as well, watch the low. The low and the highs are crucial in a market's move, because as the prices approach these areas, if they're broken, then it can break a trend either way from the previous day. So keep an eye on these. Okay, that's it for this one. As ever, thanks for watching. See you in the